Hi everyone and welcome back to my morning report chart analysis videos on Thursday the 9th of June with me, Richard Perry, market analyst at Hantec Markets. Are moving on to dollar yen, and we're seeing further declines on dollar yen. We've now had 1, 2, 3, 4, 5, 6 completed bear candles in the last 7 days. The only real blip in that was Monday's trade, which was a rebound move into a big resistance band between 107.50, 108.20, and we've subsequently rolled over and started to push lower again. We've actually broken on an intraday basis Monday's low, 106.35, just mildly broken it around 106.28. But it looks as though we're going to be testing this 105.52 level, and ultimately that is the big test of support, because if you break that, got to break all the way back to these levels seen not since sort of November 2014, where we sort of dropped towards the lows of 101 area. 105.20, but then subsequently below that you had 101 as the key support area. So 10 years is this sort of key reaction, this key consolidation from 2014. Actually, sorry, let me do it on a 5-year basis. It's support area from 2014 is the next real low, and that's around 101. So if you break that 105.20 mark, then you're back at those levels from 2014 around 101. So it is really is a sort of developing bear picture here. You've got the configuration which is consistently bearish. You've got lower highs, sort of testing lower lows. You're trading underneath all the moving averages. You've got all the momentum indicators which are negatively configured. The RSI, excuse me, failing at 60. You've actually got further downside potential as well, only at 36, whereas sort of the big sort of selling phases have got to the mid to low 20s on the RSI. You've got the MACD lines having crossed over, falling away. The stochastics are falling away again. It's all pointing towards negativity, selling into any sort of intraday move on the upside. And here we see on the hourly chart, where sort of lower highs and lower lows, you've got the consistent downtrend. So very mildly broke it. I suppose we could sort of mess around with that downtrend a little bit, but certainly you'd still argue it's still intact pretty much. Certainly in the last couple of days, falling lower highs and lower lows. Any sort of intraday bounces are getting sold into. You got 657 up towards 710, I think it is. That's that candle high. If I could get my use crosshair. Yeah, around 710. So 655 to 710. So about 50 ticks, 50-60 ticks of rally that you tend to get in these intraday moves before falling over again. So bear that in mind. Maybe you'd get that. Hourly RSI not yet at 30. Again, the big sell-off from the payrolls report got to 16, 15, 16, and that's where the sell-offs have tended to go to. So there is further downside potential in the move, and look at the MACD lines as well, further downside potential there. So it's all pretty much pointing towards, I think, a retest of 105.50 in due course, and obviously, as I said, a break of that 105.50 and 105.20, which is the sort of 2014 low. That you'd sort of open up for further weakness, and it would look pretty dour. So it looks pretty negative. Rallies a chance to sell, and I think further downside. So wish you good luck in your trading on dollar yen, and I'll speak to you later. Thank you.